Hello everyone, welcome to One-on-One with the Prophet, and today we're going to discuss Tesla. So Tesla is a company that's near and dear to my heart. I've been investing in Tesla since 2013, so it's been about 12 years now. It's also probably my favorite company because it has so much potential going forward, and I was fortunate enough to recognize much of the potential that we see now a long time ago, and the stock has done very well for me and other people that have invested with Tesla on the long side over the years. Tesla just reported earnings. They missed on the top and bottom line here. So we see that Tesla reported 73 cents in EPS. That was a 4-cent miss. And the revenues came in at 25.7 billion, which was a miss of 1.44 billion. So having said that, the sales still increased by over 2% year over year. However, that's not really substantial growth for a supposed high growth company like Tesla. So you would expect the reaction to be very bad to these earnings. And now if we look at the stock here, we see that the initial reaction was quite poor, and the stock took a basically nosedived here all the way down to 365 in after hours trading right after these numbers were released. However, there was a quick rebound in the share price, and Tesla quickly started trading around 375 to 380. And then when the conference call began, we actually saw the stock jump all the way up to about 410, 415, and we've seen a little rollback since then, and now we are closing in on about where the stock was trading at the beginning of the trading session yesterday. So what gives with all this volatility and basically what's going on with Tesla here? So let's take a closer look. First, I want to draw your attention to my new article here that I wrote this morning. Tesla by the post-earnings dip, if there is one, because right now the stock is actually a little bit above where it had closed before it reported earnings. So going through my article here, I discuss how we actually discussed Tesla earlier and how it was one of my long ideas for 2025. Now, this article was written just several weeks ago before the earnings, and I'm going to compare the earnings that I predicted in this article to which were quite close. But the point of this here is just to kind of see where Tesla was going, what the expectations were relative to the actual results, and where the company did well and where the company could have done better, and probably more importantly, where the company will continue to do well going forward. And I just want to look at my previous Tesla articles here on Seeking Alpha. And I had several really bullish articles here when the stock was still trading at relatively low levels, slightly above 200, but I started really becoming bullish on Tesla this time around, like when the stock was below 200. We added most of our positions to the all-weather portfolio, to our Tesla holdings actually back. So we had Palantir as the most significant position, but then Palantir was starting to top out, so we rotated out of Palantir and into Tesla. And most of the rotation was done around these levels, around $150 to $200. So now Tesla's around 400, but that really hasn't changed the long-term thesis concerning Tesla. So let's take a look at some notes here from my article this morning, dissecting these earnings a little bit. So first, I think it's important to mention, despite these top and bottom line misses, basically the market is really looking for... Tesla is not a company that trades on earnings. That's obvious. And the reason why it doesn't is because Tesla, despite being a massive company and being relatively mature in its car segment, it is still a high growth company because of its energy business, because of the more potential in its car business relative to new vehicles coming out, relative to the Tesla Semi coming out in more numbers. Potentially they can do something to improve the Cybertruck to possibly gain more market share in the pickup market. And we already know that the Model Y was the best-selling vehicle last year, and it could continue to be the best-selling vehicle this year overall out of any vehicle, not just EVs and just in its segment. So we need to consider that basically investors are looking forward to Tesla's full self-driving or FSD, AI, and robotics and the energy business, because these are all higher margin businesses, and these businesses have very high growth potential. So for instance, we could see about 50% gain in Tesla's energy generation and storage business, which is already recording considerable revenues. Last quarter it reported close about it actually reported over 3 billion this in Q4, which was a record-setting number and quite impressive because it's about 112% over what the business generated just 1 year ago. So we're seeing tremendous growth in Tesla's energy generation and storage business, which will continue growing. If it's generating 3 billion basically a quarter now, it could be, generating close to $15 billion dollars. Maybe it can generate in 2025 or more because, we're seeing the growth continue in that business. But perhaps more importantly, so we're also getting a stunning Model Y refresh here. So, I mean, it looks great and probably could continue being the best-selling vehicle globally. Also, I want to note that the starting price of the new Model Y is about 46.5 thousand. Now, this is relative to the older version, which has a starting point of just 34.5 thousand, which should really work in Tesla's favor to raise those average selling prices and also boost its margins and basically increase its profitability in future quarters. So anyone screaming Tesla's profitability is, it's worsening, this is basically just a transitory factor, and Tesla's profitability should improve as we continue moving forward. Now, looking for growth to return in 2025. So Tesla is anticipating 20 to 30% growth in 2025. They mentioned this earlier. I believe it was before this quarterly announcement. But that doesn't mean that they're not going to achieve 20 to 30% growth this year. So Tesla expects 50% growth in its energy generation storage business this year, and in a bullish case scenario, it could come in higher than that. Additionally, we have to consider Tesla's upcoming quote budget vehicle, which should be around in the $25,000 to $35,000 range, which could really add to Tesla's revenues, and that should be coming out. We should be seeing sales for that later this year, and especially more and more sales most likely in 2026 and beyond concerning Tesla's new budget vehicles. Nonetheless, much of the excitement was focused on the future of FSD, because this is really the business that could generate enormous revenues for Tesla, because this is basically a software license that they can use in various cases. They can enhance and incorporate it with AI, and it could basically just make cars drive themselves, and this could be very beneficial in the retail sector, in the commercial segment, as well as in the future robotaxi business. And for anyone who thinks that this is like a far out story or something that's in in the distant future, it's really not. And Tesla's already has these 99 monthly FSD subscriptions set up, and I believe that the future is autonomous. It's going to be all about autonomous driving in the future, and there's a very high probability that these types of services can really increase Tesla's top and bottom lines, and especially increase Tesla's profitability, because these are basically software services type businesses as opposed to Tesla's core revenue generation of a kind of a traditional car company type business model. So we're seeing Tesla move away from that more traditional car-like company business model and more towards like a tech AI company type software business segments, where they will be generating more and more revenues from in future years. So I think some critical things to consider from this are that Elon Musk expects unsupervised FSD cars in Austin, Texas in June, and that will likely spread to other parts of America very quickly. There's also news about Europe and about China doing their own versions of Tesla's FSD programs expected sometime early this year in 2025. Now, also robotaxi services in California this year and in other U.S. markets, which should be very beneficial for markets in general. Supervised FSD continues to improve rapidly with the aim of exceeding human safety levels. So we're seeing dramatic changes and dramatic improvements in FSD. And I believe that Elon Musk's close relationship with the president, with the White House, this definitely can't hurt in this regard. Instead, it's likely to help enable Tesla to kind of get over those regulatory hurdles more quickly and potentially deploy FSD on a mass scale sometime later this year or in 2026. So we also have the Cybercab entering volume production in 2026. So that's another kind of portion of the FSD business where, some of the FSD business will also be incorporated into this cybercab or robotaxi fleet that Tesla anticipates could be another very, very significant revenue pipeline for the company in future years. Now, there was also much focus on the Optimus humanoid robot, as the company may make at least several thousand Optimus robots in 2025, which could basically increase exponentially as time moves on and as these robots become more and more capable, and as regulatory approvals materialize, and as these robots become more and more functional in time. I believe Elon Musk used some pretty large figure, something like $10 trillion. Outlandish and just insane. However, I would never actually bet against Elon Musk, because time and time again he's proven that even though he may be a little early in some instances, he may be a little overly optimistic in some cases, but oftentimes he seems to come through on what he promises, and that's and that's been evident over the years. So I'm not doubting the Tesla bot, or the robot business for Tesla is going to be huge in the future, but it's likely only a matter of time. Elon Musk discussed he talks about things going ballistic in 2026, and I believe what he means by this is that Tesla will really start seeing more and more of the non-automotive sales type revenues contributing more and more to the company's top and bottom lines. So we're probably going to see more and more incorporation of AI, full self-drive, robotics, and basically we can also kind of imagine an ecosystem where potentially the Boring Company plays a role with the tunnels transporting autonomous Tesla vehicles in the future, which is a possibility. We can also discuss Starlink and how it can play a role, providing assistance and internet and other services to Tesla AI. And basically, I think when we talk about Tesla, we need to look at the really big picture. It's not only Tesla, and it's not only cars. It's the huge infrastructure that's being built. It's the massive charge. It's the autonomous driving element that's going to kick in all these things. And on top of that, we also need to consider Elon Musk's other companies and how they contribute to Tesla to enable it to possibly become the most valuable company globally down the line. And that's what we're looking for. So, just look my price targets model. We could probably see Tesla in the $550 to $600 range this year. I think that's very reasonable, and that's based on a forward earnings projection of around $6 next year. May seem high. Again, never underestimate Tesla and its ability to generate higher profit people expect at an unexpected time. We could see 550 to 600 just on the optimism and everything that could happen and may happen in 2026, 2027, and 2028 with all this FSD, AI, and robotics and energy just kind of converging to potentially boost revenues considerably, possibly to as high as 200 or 250 billion by 2027, 2028, which really is not it's not that far away. So we're looking at a possible 100% to 150% revenue increase just from last year, which would really be impressive, really be stellar. And we see these revenue growth projections that I have for the stock. Now, this is a base case. We have 30% moving down to about 22%. But in a bullish case, maybe we can keep that revenue or maybe even higher for a few. Earnings per share could increase dramatically because, again, Tesla is moving away from that low margin car assembly business and basically moving towards higher margin services and energy generation and other types of businesses, software, licensing, AI, and robotics, which could be substantially higher margin businesses. So as we move forward, we know that the growth should persist. So the market could continue to reward Tesla with these substantial multiples. My model has the forward P decreasing steadily in future years from about 100 to 95 now to probably around 50 by 2030, and we have the price projections moving up steadily to potentially about $1,500 by 2029 to 20. Thank you for watching my Tesla video. If you enjoyed the video, please click like and subscribe to my channel, and also please join me on Seeking Alpha, the Financial Profit.